What's going on? We lost $245 over trading today, and I'm gonna go into it. So this recap is on the stock trades, and then the next recap will be on the NASDAQ, and then the next one will be on Bitcoin. So stay tuned for those recaps. I'll drop, hopefully, well, on the weekend, if I have extra, I'll drop like two on the day, just to kind of bump them out there. But this was on 4 stocks, which is over trading for me. I'll be honest with you. I'm going to get into the kind of the reasoning why, and hopefully, as I've decompressed and unpacked it all, like kind of like my reasoning and thoughts on it all. We traded CrowdStrike, Tesla, Meta, and AMD. Okay, CrowdStrike, Tesla, Meta, AMD, and that equates to $244.62. I'm going to round up to $245 in losses. And this was all taken on the $10,000 account. So that's what the losses are. They're all under $100. Some are in the 30s and some are in the 80s and 90s. Now, let's get into kind of the progression of the day. It went with AMD, Meta, Tesla, and then Crowd. So we'll kind of go through that progression because I think that's important to start off with for the recap. So on this specific day, I started off by looking at daily charts before the market opened, and I said to myself, well, if we are looking short, I think I want to be getting short AMD because we have the potential for a bigger breakdown, and on the volume profile, we're looking at descending volume until we get down to about 147, 148. So I like the potential for momentum to continue to the downside there on AMD. Okay, that was what the thought process was. And so I was looking kind of, almost was like a bias, but I was like, no, that's like where the better bets are going to be. Now, what you'll notice is that just by looking at this chart, we do go down. Like AMD does go down, but it doesn't go down that much. And the nature of how it got to where it finished, or how it got to the low of the day, was not very clean. And I like clean. I prefer to trade when it's clean, and I sometimes will trade when it's messy, and I tend to find myself afterwards saying to myself, why did I trade when it's messy? Now, I do avoid it a lot of the time, but sometimes I don't. And I've gotten better at avoiding it over the months and even years, but there's still things that we got to work on. This is one thing that I think I could have done a much better job looking back as I take a step back and say, how could I have potentially seen it coming? Not that you never know, but the nature of the first 20 to 30 minutes right here was very choppy. And so, yeah, while we started to break down and we got these breakdowns, the nature early on was choppy, and that chop preceded chop. The chop had a trend to it, yes, but I don't short the pops. I do the opposite. I trade the momentum. And I don't care if that's what you think is better. It's not how I do it. And there are infinite ways to do it. And some days I will look like I'm a freaking amazing, genius. And there are some days where I will look like an absolute dumbass. That's just how it's going to be. But if you manage risk and you stick to your strategy, you know the ins and outs of your strategy, and you can critique it and get better at trading your strategy, not 10. I have not done well when I tried to trade multiple strategies at the same time. Doesn't treat me well. So that was the idea, and I ended up getting in on the AMD at 10:15 Eastern time, which was right around this breakdown right here, and I put a stop loss above the breaking candle's high, so because we're shorting. So what ended up happening was AMD breaks down, I put my stop loss right here, it gets wicked out, and then AMD proceeds to sell off. Now, hey, I'll be honest, we kind of had the right look. Like, it wasn't like, oh my God, I was so off. No, like we're in the right idea. We just got wicked out. And am I surprised that I got wicked out? Not really, based off the wicky action that we had preceding the breakdown. So it's not like it surprises me that much. I'll be real. However, had I not had the wick, and there was a trade a couple days ago that I barely, on the Dow, I believe, that I barely stayed in, and the wick didn't take me out, and then it went to my target. Had that not happened, would I have hit my target? I don't think I would have hit my target, but I think I would have been up enough at this point on the AMD trade that I would have moved my stop loss to break even, and there's a very good chance this trade would have been a zero. It would have been a break even trade. So as I look back on it, because of this move that we then proceeded to have here. I was looking for under 151, I believe was my ultimate target, which was going to be down. It was actually down towards where we end up hitting later on the day, but we would have had a very nice move that I was a very good chance I would have moved my stop loss to break even at that point in time. So I could have avoided the $81, $82 loss on that. Okay. Now, as that is stopping me out, I'm looking at meta. And I'm saying to myself, so here's, I think, where I probably had the signal to just stop and avoid the stock market altogether on this day, because the stock market was just choppy. Doesn't mean you can't trade, because there's other stuff. There's Bitcoin, which I did take trades on, which made me some money back, actually a lot of money back. And those trades actually worked out pretty well. But when we get this look, there's not a lot of consistency and congruency. So AMD weak, right? And then I look over and I'm like, Meta's crushing. Meta's doing the exact opposite. It's actually got a bull flag break to the upside. So simultaneously, while AMD is breaking to the downside, Meta's breaking out to the upside. That's usually a sign to not trade. I'll be completely honest. And this trade, I did not lose a lot of money on. I ended up only losing $37 because I cut it short. But I probably didn't need to take in the first place. Bigger time frame alignment here. All I really have on this is obviously the overall bigger trend line, and then we had this gap fill, which, by the way, it did fill the gap. I was looking for a little bit more up towards the 490 level, which was I was going for maybe a little more than I probably needed to at the time. And we got the push, or we got the breakout. I liked it. We had high volume, so it wasn't like, oh, this is terrible. We had the look. And then once we kind of got this little pump up in this direction, I was like, okay. I held through this. We got this push back. And then once we started to come back down, that is when I was like, nope, I ain't playing. So I lost $37 in this trade, 916 and 932. Actually, maybe I didn't do that. Maybe it was this one. Yeah, sorry. My bad. I ended up getting out in here as we broke down here. So we had this initial push up on this candle, on the 915 candle. We got 1, 2, we had about 10 minutes of pushing, and then we started to kind of just stall out. I also was noticing the market was weakening at the time, and so then what I decided to do was just cut it on this candle. I just did not like the look of this candle, and so I cut it on that candle at 10:30, the 10:30 candle, which was executions. The 932. So in that 10:30 candle, I cut that off there to lose only 37. I would have eventually gotten stopped out fully. So I minimized the overall risk on that trade. And I was risking less than $100 in this trade, as I do on all my $100 or my $10,000 account trades. So you can kind of see how we're looking at this, and we're kind of going back. We go short, then we're looking long. We're kind of like, a lot going on here. We don't need to be doing this, is kind of the thought process. However, I did not stop there. I looked and I said, Tesla has the most perfect, beautiful short setup. And it did. I'll be real. It did. It did. And I like the setup. We had better momentum on this one. It was the weakest stock of the day. So it had good bets. It was good bets, man. It was a good bet. Tesla's always good bets. And it did end up going where I thought it would go. My ultimate target is just that the way that it got there did not cater to my strategy. So we had the momentum to the downside. We obviously had pressure on Tesla yesterday. Cool, great. Bigger picture chart was breaking down underneath a little bit of a consolidation on Tesla. It has been strong. Yes, I understand. However, we have some lower highs, and it started to break down underneath here. So I'm like, okay, we got a breakdown setting up here on Tesla. Let's go. Let's play the short side. It was the weakest stock on the day that I was looking at across my large cap list. So I see Tesla consolidate right here, clean area of resistance or support. We break it, I enter, and then I proceed to get stopped out shortly after. It goes just north of my stop loss by about 50 cents or so, and then proceeds to sell off all the way to my target. Nothing you can do about that. I could have looked, while Tesla was the weakest on the day, here's a caveat to that. It was not necessarily the weakest at the time, because at the time, I believe other stocks were kind of breaking down to new low of the day, while Tesla was struggling to do so right up in here in this first period of time. And that was a potential sign that it had maybe started to catch a bid or some strength or whatever, and then it ended up bouncing. That was the thought there. So I thought it was good bets. I still like the trade idea. I'm not opposed to it. It just didn't work. And then after that, we went to CrowdStrike. This is where I kind of was like, this is where, you kind of start to unravel and you spiral. I will admit, 100% is what I was doing. And then I caught it. I said to myself, okay, CrowdStrike with all the outages, if you were paying attention on Friday the 19th, there's a lot of outages. I don't even know. I don't know the whole details of it, to be honest with you, but I'm like, hey, CrowdStrike was down like 20%. Now it's down like 8 or 9. If we can get a little bit of a pop back up here or a trend back up all day, I wouldn't be surprised if CrowdStrike makes a push back up into that 320s, maybe 325, and regains some of what we have, a little overreaction. Problem is, it didn't happen. But either way, I'm looking at this from a bull flag perspective, and it was certainly there. The problem was that the upper wick started to get a little wishy-washy. There was, on the breakouts, there was volume, a little nudge of volume on the breakout candles. It just didn't get the follow through. And then as I noticed that, it was in here that I was like, I'm not liking this anymore. And I was like, you're over trading. This is not to your strategy. This is more of a dip buy trade that's just got some momentum right now. This is not a breakout trade. Technically on the 5-minute it is, but bigger picture, you're playing a bounce back. Let's get the fuck out of this and not fuck with it. And so I did. And we only lost 34 on that. So I minimized the damage. Think about that. 4 trades and we lost, 245. It's not ideal, but it's not terrible. And I do understand like the biggest problem that I'm having on days like this is like I'm trying to fight the chop. I don't need to fight the chop. I don't need to fight the chop, but I've been trying to fight the chop a little bit, and I think that was the biggest problem today. Now, I can do a better job for sure, but that's the recap. So all those trades logged here in TradeZella. We ended up the day down 164, and we had a NASDAQ short that looked so promising at the time, but just didn't work. And then we had Bitcoin long. Actually, technically speaking, I'm green on the day. I just haven't realized my other Bitcoin long, but that's a swing to begin with. So I'm not going to realize it just to be green on the day because I don't give a fuck about what the day is. I care about the bigger picture of the trades. So that's the recap for today. A little too much, but stay tuned for the next recap because we have a NASDAQ recap and then a Bitcoin recap coming right up. Peace.